Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 31st, 2025, we're tackling Bitcoin, a market that has been a hotbed of activity, heavily influenced by recent global events. Just recently, the White House unveiled a new crypto policy roadmap, aiming to usher in what they call a golden age for digital assets, a development closely watched by investors. Alongside this, the market has been anticipating and reacting to key Federal Reserve announcements, impacting overall sentiment. News outlets like Investors Business Daily reported Bitcoin easing after the White House report and before Fed decisions, citing a dip from around $104,719 to $103,821 around June 17th to 18th, and even below $99,000 on June 22nd, before recovering. Yahoo Finance highlighted that crypto enthusiasts were keenly watching to see if Bitcoin could surpass its previous all-time record high of $109,135 set earlier in 2025. Now, let's turn our attention to the charts to see how these events have manifested in price action, starting with the broader daily view. Looking at the daily chart, we can clearly see Bitcoin's impressive long-term upward trajectory, especially through late 2024 and into 2025. What's striking immediately is that Bitcoin has not only surpassed the $109,135 all-time high mentioned in the news, but it has actually established a new, significantly higher record. The highest point recorded recently on this daily chart is an astounding $123,231.07, demonstrating robust bullish momentum. Let's zoom into the period mentioned in the news, around mid-June 2025, to observe the reported price movements more closely. Here, specifically from June 16th to June 22nd, we can confirm the price indeed experienced a notable correction, dipping from above $106,000 down to a low of $98,225.01 on June 22nd, precisely matching the news reports of dipping below $99,000. However, Bitcoin quickly showed resilience, bouncing back from this key support zone around the $98,000 to $100,000 level. This level acted as a strong demand area, preventing further downside. The recovery from this dip was swift, indicating strong buyer interest and underlining the long-term bullish sentiment, converting previous resistance into new support. Current price action shows a strong consolidation near the recent highs, suggesting a potential for another leg up. We can identify initial support around the $115,000 mark, formed by recent price floors, and a stronger support around the $109,000 level, which was the previous all-time high, now acting as significant psychological and technical support. Now, let's shift our focus to the 1-hour chart to examine the midterm trends and recent volatility, noting that this data goes up to July 13th, 2025, which is slightly older than our latest daily candle. During this period, from July 10th to July 13th, we observed Bitcoin consolidating and making slight upward movements. Specifically, on July 10th, after a strong push from around $111,000 to over $117,000, the price entered a period of tight range trading, indicating a balance between buyers and sellers. Volume spikes accompanied the initial surge on July 10th, particularly around 2100 hours Universal Time Coordinated, confirming strong buying interest at the time. The subsequent lower volume during consolidation suggests a lack of strong conviction from either side in the short term, but it could also be a healthy cool-off after a significant rally. The hourly chart shows minor support levels around $117,000 to $117,500, which price repeatedly tested and bounced from, forming a base. This demonstrates that, even in a broader uptrend, short-term pullbacks are met with buying demand. Traders should monitor these smaller timeframes for entry and exit points, looking for clear breakouts from consolidation patterns or retests of these minor support levels. Moving to the 15-minute chart, covering July 25th to July 28th, We get a granular view of recent intraday price action, again noting this data is also slightly historical compared to the daily chart. Here, we see a pattern of slight upward drift followed by minor corrections, creating a series of higher lows and higher highs within this short window. The overall trend within this 2.5-day period is still constructive, indicating persistent buying pressure despite small profit-taking dips. Notice the high liquidity with transaction counts consistently in the thousands per 15-minute candle, suggesting active trading throughout the period. Key intraday support can be identified around the $117,800 to $118,000 range, which Bitcoin frequently tested and held. Resistance is less clearly defined but appears around $118,500 to $119,000, where rallies often stalled. The brief breakout above $119,000 and subsequent retreat on July 27th and 28th indicates that while upward momentum is present, significant resistance exists at higher levels, requiring more conviction or a fresh catalyst to push through. For short-term traders, buying near the intraday support levels and selling into resistance could have been a viable strategy during this period of consolidation. Monitoring volume on these short time frames is crucial. Increased volume on upward moves reinforces bullishness, while high volume on drops could signal weakening sentiment. Returning to the daily chart for our final overview, Bitcoin's long-term outlook remains decidedly bullish. The establishment of a new all-time high well above the previously noted $109,135 mark is a strong indicator of sustained demand and investor confidence. The market's resilience in shaking off the June dip, which correlated directly with news events, highlights its underlying strength. For the short term, Bitcoin is likely to consolidate around its current levels, potentially retesting the $115,000 to $116,000 area as minor support. A breach below $109,000 would be a significant bearish signal, but based on recent price action, this is unlikely in the short term unless major negative news emerges, with perhaps a 20% likelihood. Conversely, if Bitcoin can firmly break above the $120,000 mark and establish it as support, we could see a rapid ascent towards $125,000 and potentially beyond, with a 60% likelihood given current momentum. Traders should watch for continued positive regulatory news, as the White House's Golden Age rhetoric could attract more institutional money. Also, upcoming Federal Reserve meetings and inflation data will be crucial. Dovish signals or controlled inflation could fuel further rallies. Keep an eye on trading volume. Sustained high volume on upward moves reinforces trend strength, while declining volume on rallies or increasing volume on dips could signal exhaustion or a reversal. Always combine fundamental news with technical indicators for informed trading decisions, and remember that sharp price movements can occur suddenly in this volatile market.